Hello everyone, and thank you for joining us today in this educational presentation of our new technique called steps. Now, not a day goes by where someone asks me about trading and what the best entry method is or how to enter at better spots and how to fine-tune your entry. Well, this is where steps comes in. Because if you're having trouble with your entries or you have a difficult time deciding when to enter or just even to pull the trigger, well, steps is perfect for you. Let me give you an example right here by showing you just a few charts. Let's take advantage of this 10-minute chart in the spiders for all you intraday traders, okay? Obviously, we have a very strong trend here. Let's say you had gotten in at the very beginning and then gotten out too quickly. Well, where do you get back in? Well, steps will provide you with that. As you see all these green upward arrows, these are all short-term entry points using steps number 1. Now, you can also apply it for pullbacks. As we look at this weekly chart of Facebook, if you're more of a trader who likes to buy at lower prices rather than chasing a trend, well, you simply would apply steps number 2. And as you can see, you have these nice entries at the bottom of those pullbacks. So we're going to be talking about steps today. I'm going to show you how you can actually have steps for a great trial period that we're having. So this promises to be a great presentation. We're also going to show all of you the charts with our new developed PTS Primo charts. This is something I've developed with Pro Trader Strategies. It's our new educational platform. It's your portal for education in trading because it has all of our methods, all of our strategies, including steps built in the trading platform and the charting platform. So you can just basically use this, click on with easy access, and you can see exactly what all the strategies are, what all the up and down arrows are, what all the different methods are. So this promises to be a great presentation once again. Thanks for joining us. But before we begin, as always, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of results using our steps program, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. Remember, we're required by law to show you this. And as you're taking a brief moment, I also would like to invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. Every day I post different information, anywhere from little daily bits of wisdom that I've accumulated to actual signals that our strategies have generated, or even snapshots of what I posted today of perhaps a warning in a trend change with our Pet D tool. So these are all great things to watch. The information is rather limited because of the way Twitter is structured, but still lots of great little bits of information there free for you on Twitter. Okay, so first and foremost, for those of you who are new to my presentations and new to Pro Trader Strategies and our new PTS charting software, we are an educational company. I know a lot of you are looking for the perfect system, the perfect method to trade that's going to spit out signals and that you don't have to virtually do anything. Okay, that's what everyone looks for. I know when I first started trading 40 years ago, that's what I was looking for. And guess what? It doesn't work, because if that were so easy, then the statistics would be the exact opposite of what they are. In other words, 80% of all traders fail. They don't make money, but they actually fail. And most of them fail within the first year of trading. But if it was so easy just to follow some guy who supposedly made billions and billions of dollars or had the magic system, and we just mirrored his trades, well, then it would be so easy. Most of the statistics would be the opposite. It'd be 80% of all traders would be, accumulating great fortunes. But it's not that way, because there is no consistency in following someone or in just mimicking how someone else trades. If there's one thing I've learned in my 40 years of trading, 4 decades of trading, it's that no two traders should ever trade alike. You should find your particular way. Now, the reason why most two traders don't like to follow their own way is because they've never been taught to do that. We're always taught to, go to a chat room, a trading room, and kind of, trade what they're trading, or listen to the news and find out what it tells you what to do. And all of our sources are outside, and they're all telling us what to do. But we never listen to the one thing in front of us, and that's the chart in front of us. So that's what we do at Specialist Trading and Pro Trader Strategies. We provide you with the tools and information and the strategies and methods that have stood the test of time, that are not here. We're not going to promise you they're going to make you a millionaire or even buy you that extra addition to your home you're looking for. But we're trying to instill consistency in you. That's the only thing. And in my opinion, consistency is the only thing that will sustain you. Not some fly-by-night system, not some great trading indicator, but it's consistency in a method. Ultimately, you're in charge of your own trading destiny. Not me, not some guy on TV, or not some magic indicator or system. It's you who have to make the decision. So that's what we do, especially with our new PTS charting software. We provide you with all that information. So just one click away and it can be right there in front of you so that you can be in charge of your own trading destiny. Once again, as you see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect market is, the perfect time frame. My goal is to teach you how to trade. That's the same method that was taught to me when I was struggling some 40 years ago on the floor of the stock exchange when I first started trading. And this is what I believe has been able to sustain me for 4 decades of trading. This is the same way I teach all of my students. So ultimately, we give you the information, but it's up to you to apply it, to study it, to research it, and make it work for you. Okay, so that's the Specialist Edge. And we're going to talk about the Specialist Edge today, but before we begin, once again, just the announcement that I know a lot of you, the webinars you like to attend, like to take questions on each and every slide. But if we do that, I'm sure that we're going to turn this into a 5-hour presentation. So we don't want to do that. We only have a good 40, 45 minutes left. So let's just wait till the very end to ask any questions, okay? I promise I'll get to each and every one of them if you have a question. But let's just go through the slides. Remember, or write down what you had a question, and we'll try to answer it later on. Now, the only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having difficulties with your sound or your picture, oftentimes if you log off and log back on, everything will be fine. But if you're still having difficulties, we will send you a link to this presentation, okay? All right, so kindly wait till the end to ask questions, and let's begin. Now, I want to ask you a question. Has this ever happened to you before in your trading? You enter a trade too early. Let's say you get in and you feel real confident about the setup. Maybe it's some magic system you bought for thousands and thousands of dollars. You feel really good, but it's not going your way. In fact, you've been holding this and it's going the exact opposite way. So you get scared, or maybe you just say, I'm going to throw in the towel and get out, or maybe you even get stopped out. And the minute you get out of the trade with a loss, guess what? It goes right back in your favor that you originally wanted, right? Has it ever happened to anyone? I'm sure it has. It's happened to me before, so it happens a lot, all right? Or what about this? Have you ever entered a trade too late? Let's say your system, your strategy has to rely on all these requirements to be met. 10, 12, 15 rules all have to fall into place before you can enter. And by the time they do fall into place, or by the time you decipher if the news is good or bad, well, guess what? It's already gone up 3, 5, 10 points. And that's where you were thinking about getting out. So it's like you got in too late, and now you've mostly given away all your profit because you're getting in towards the top. Or how about this? Has this ever happened to you? You don't know when to get back in. Let's say you get into a trade, and it actually works pretty good. You have a nice small little profit. You feel good about yourself. And then the thing just takes off. It goes higher and higher, and it looks like there's no end to it. You want to get back in because you were right to purchase this, whatever you're trading. But the market keeps going higher and higher. So how do you get back in? Because the plan you follow isn't generating a signal. What do you do? And then lastly, you don't have the confidence to pull the trigger. This is a very, very common problem, especially among beginning traders. They study everything, they go through all the rules, they know exactly how to implement the strategy or the system, they know all about the news events, they know everything, and then when it gets time to actually buy or sell, they're too frightened to do it because they don't have confidence, okay? Well, we think we can solve and answer all of these problems with our new steps. Why? Well, because first of all, we have to narrow it down because it's really not that complicated. If you look at it overall, there are only 2 types of entries when you're trading. That's it. There are really just 2 types of entries. The first is a continuation entry. All right, so what does that mean? Well, that means that you find something that you're trading, whether it's intraday short-term futures, a long-term stock, currency pairs, makes no difference. And there's a nice trend underway, as you see here. In this case, it's an uptrend. Well, a continuation entry just means that you buy all along the upward trend. And you're not caring about trying to purchase at, cheaper prices. You just want to buy this because it's taken off and you don't want to miss it. That's a continuation entry. Secondly is the pullback entry. That's an entirely different type of entry plan. So what is a pullback entry? Well, you're looking for price to usually head up, but then once it's heading up, it starts to sell off, okay? This is where traders usually think that we've hit some type of top and it's time to get out to sell. You go to the chat room and the guy says, whoa, all the institutions are selling. The volume is picking up. These are sure-foot signs that the rally is over. You got to get out. Let's get out now. In fact, let's even short this. But in all actuality, this is what's called a pullback because prices are just reverting to the mean. They're just pulling back to a specific entry level. And based on some parameters, something that you've studied, this is where you actually want to purchase. You know, it's like a stair-step effect. So we're not really going lower. It's just a very common phenomenon called a pullback entry. And then once all the rules come into place based on your requirements, you enter because based on a pullback, price should resume its upward trend. This can happen in an uptrend or a downward trend. So pullbacks like to purchase at lower prices or they like to sell at higher prices. Continuation type of entries like to just buy high, sell higher, continue to buy while it's going up because you don't want to miss it, usually involved with strong trending markets. All right, so this is where we're going to be introducing steps. Steps can solve all these problems with these two types of entries because there's only two. No matter how much you try to overcomplicate things, there's only two types of entries, continuation and pullback. Now, the ways in which you can be a continuation or pullback trader, well, there's multi-million ways, but we're just going to show you what we feel are the best. This is our new proprietary tool called STEPS. Now, STEPS simply stands for short-term entry points. That's all it is. Remember, they are a piece of the puzzle. They're just a piece of the puzzle of a strategy because if you have a strategy or a technique or a method or a trading plan that is just really doing okay, but it's the entry that's giving you trouble, this is where STEPS can come in and really help you. It's that piece of the puzzle that you've been searching for. Now, here's the main thing we want you to know though. STEPS is not a strategy. It's not an indicator, but it's a combination of two proprietary entry techniques that can be applied to your current trading method or used as building blocks for the construction of one. We have a lot of members who actually use STEPS because they like to tinker under the hood. They like to make their own trading plans based off a lot of the concepts we teach at Specialist Trading and Pro Trader Strategies. So they just like to use it as their entry point. That's fine. So let's talk about step one, but please remember, once again, because I know I'm going to probably get this question, as I always do whenever I give this presentation talking about steps, we are not, telling you that this is where you enter, this is where you place your stop, this is where you exit. Remember, those are all very important pieces of the puzzle. We're just filling the gap for people who have a very difficult time with their entries, and that's what STEPS does. STEP is that piece of the puzzle that fills that entry problem that you're having. Okay? In order to have a full-fledged trading method, you still have to take into consideration stop placement. You have to take into consideration exit placement and how you're going to protect your trade, how many futures contracts, or how many shares you should be trading, money management. Those are all important things. We're just giving you one piece of the puzzle today. All right, so let's talk about step number one. This is an entry point designed for trading strong trending markets. These are continuation trading markets. So, for example, we look at a strong trending market right here. This is IBM from November coming into March and April of this past year. All right. Obviously, we were in a very strong trending market. Where do you get in, though? All right. Let's say your method, or you're looking for something that usually applied doesn't generate any buy signals. All one would have to do, especially with our new PTS charting platform, would just simply click on the method toolbar here, which is steps number one. We have circled in green. A drop-down menu will appear, and you just click on signal arrows, and it will provide you with all the signals that generate high probability entry points. These are all following a strong trend. Now, you can decide which one you want to take, okay? Now, someone usually says, God, Steve, this is great, but how exactly do I enter? I mean, do I just, buy, or what do I do? Well, remember, it's up to you. We're not telling you how to trade. We're giving you information and then letting you decide. Now, the information we give you are these different variables and options. Firstly, you can enter on the market close. So once that bar closes, whether this is a daily bar or a 5-minute bar, you simply purchase because you'll see the green arrow being generated below it. Okay? Now, if you want to wait and possibly wait to get confirmation, well, then you would enter on the next bar open. So rather than just purchasing on the close, you're going to wait for the open of the next bar. Many times, if you close towards a high, the opening of the next day will be a little bit lower. It's up to you. And then lastly, you can wait for confirmation and just wait for it to trade one tick above. So, for example, if you see this close here, right here, well, At the end of the day, a green arrow was generated. Now, you're not going to buy here. If you bought in the opening, you would have purchased it lower, which would have been nice. But if you waited for confirmation, you would have waited for the next day to trade one tick above. These are all different points of entry. It's up to you. We're just sharing with you high probability points of entry, and each one would have been okay. Now, the beauty of steps is that they track the direction of the market. Remember, because we're trying to trade with the trend, and we're trying to find strong trending markets. So once IBM topped out here in March coming into April, well, guess what? The trend immediately changed. But that's okay. As you notice, it no longer generated any buy signals. In fact, if you clicked on the Steps 1 tool again, you see that it was now generating sell signals. So we're never going to try and pick tops and bottoms. That's a recipe for disaster. We're only trying to trade in sync with the trend. And you could apply the same entry points as well. You could go short, with options. You could enter on the close of that bar. You could enter on the opening of the next bar, or wait for it to trade one tick below the signal bar. Entirely up to you. Here's a strong trending market to the downside, GWW. You click on the Steps 1 toolbar and look at all the arrows that were generated. Now, looking back at hindsight, sure, it looks great, but you would have known as far back as here to go short. Excuse me. So you could have sold at the end of this day. And remember, this is an expensive stock, so it doesn't mean you're going to short the actual stock. You would have to have a large account to do that. But you could purchase puts or some type of spread strategy to the downside. And as you see, the stock, literally dropped tens of points to the downside. You had different chances to go short. You could enter the market on close. Once again, you could enter on the opening of the next bar or one tick below. Any way you decide, it's your choice. You're in charge of your own trading. Now, here's a weekly chart of the spiders, okay, coming into April of this past year. As you can see, strong trend. Someone looking back in hindsight would say, well, yeah, Steve, I'm sure there was a strong trend if I just look at this, but how could I have purchased maybe even just halfway? I'm not saying I had to purchase down here, but what about even around here before we had this great, tremendous rally happening all throughout 2016 and 17? Well, click on Steps 1. You actually had a nice buy signal here in mid-16. Another one here towards the end of 2016. These are weekly bars, remember. And then some more all along the way to the upside. So you could use this as a market directional tool, okay? Or add it to long-term positions. It's up to you. So let's say you have some long-term positions in your IRA and they're in the S&P 500. Once you saw these signals being generated to go along the spiders, which is the ETF for the S&P 500, well, naturally that's telling you that the index is going to go up, so you could purchase those individual stocks possibly that make up the index. Remember, it's up to you. This is not a system. A system tells you how to trade every time. You have no room for any type of interaction with it because it's in charge. But with strategies, which is what we only teach and trade, we allot 30% so that you can make your decisions. We're not going to tell you how to trade. Now, we can also apply this to a 10-minute time frame. Use the same chart, the spiders, but looking at a 10-minute time frame. Obviously, we're in a strong uptrend, but how could we have taken advantage of that well before the strong uptrend started? You click on Steps number 1 and look at all the buy signals that were generated all along the way. So you can use this for intraday trading just as well. All right, so that, once again, is Step 1. It's simply a piece of the puzzle, not a full-fledged strategy. It doesn't say anything about stops, doesn't say anything about exits. It's just a piece of the puzzle that will help you decide where to enter. But entering in strong trending markets, either strong trending markets to the upside, strong trending markets to the downside, can also be in futures, can also be in currency pairs. Makes no difference. But wherever there's a strong trend, we are looking to apply strategy number 1. That's usually for the type of trader steps number 1. That's usually for the trader who likes a lot of signals, because as you can see here, there were a lot of signals being generated. Now, what about that other type of trader who says, well, you know what? I'm not looking for a ton of signals, and I'm not looking to buy something that's just taking off and I want to get in. I'm looking to fine-tune my entry at a lower price. I want to buy towards the low, okay, of a pullback. And I want to sell towards the high of a pullback. Well, this is where step number 2 comes in, because it's designed specifically for trading strong pullback markets. Let me show you how. Here's a chart in Tiffany, okay? As you can see, Tiffany went straight up into March, and towards March into April, it looks like, well, it's topped out. Let's say the trading room you go to says, no, we don't like this. We've hit some major resistance, and the Fibonacci numbers all say that you should sell this because it's going much lower. In fact, it's probably going to make new lows by the end of the year, okay? So you sell. Well, how did you decide to sell? Because an outside source who has no higher consistency level than anything else is telling you what to do. Remember, this is the way 99.9% of traders trade. Look at your own trading. Is that the way you make decisions, by listening to the news or some guy on TV or a chat room? Listen to the market. That's why we created the new PTS Primo charts, because it tells you, it teaches you how to listen to the market. So if you wanted to listen to the market and use a really nice pullback entry, all you have to do is click on steps number 2 right here in the strategy tab, the green strategy tab. The drop-down arrow will appear. You would click on signal arrows to tell you where the actual signals were. And actually, there's no reason to be selling here. Who cares about, what the Elliott wave is or Fibonacci or the institutions? Who cares? What is the market telling you? The market's telling you that this is most likely a buy scenario, a pullback, and that you should look actually to be buying this as opposed to selling it. So just like steps 1, you could enter any way you'd like. But look at the nice pullback you had. You purchased towards those lows, and then once we bottomed out on that sell-off, that reversion to mean, we went back up and made higher highs. Let's look at another example, GPC, okay? Someone looking at this would say, well, Steve, there's really strong support here. All the institutions and the brokers' houses love this. You got to buy this. And look at it, it's bottomed out. It's starting to go back up, okay? Based off of what other people or other indicators are saying. How about what the market's saying? Well, you click on steps 2, and the market is telling you that this is just a pullback. The overall trend is down, and this is just a little reversion to mean a pullback before we go lower. Now, is this guaranteed? Absolutely not. Nothing is guaranteed. It's just a high probability setup to go short. So you could have applied any of those techniques. You could have sold right off the close. You could have waited for the opening of the next day or waited for it to trade 1 tick below. But either way, you would have had a nice trade, because look what happened. You see, the market is always telling you what it wants to do. Our problem as traders is that we never listen to the market. We're always listening to tons of indicators. We're always listening to the perfect system. We're always listening to some guy in a chat room. Listen to the market, and you'll have a higher level of consistency in your trading. Now, a lot of traders say, well, Steve, I don't intraday trade. I don't trade daily bars. I'm an investment type of trader. I like to invest in my IRA. When IPOs come out and new issues come out, I've studied. That's what I like to do. I'm an investor. I like to hold for the long haul. Okay, you can still apply this. That makes no difference. There's trends in monthly bars. There's trends in weekly bars. Here's a weekly chart of Facebook. Now, this goes all the way back to its inception in 2012. Excuse me. Remember when it first came out, there was so much talk and buzz about the stock. Everyone was so excited about Facebook. It opened up for the public, became public offering, and immediately lost about half of its value in the first month or two, okay? It came public roughly in the 40s, and 2-3 months later, it was trading in the 20s, actually below 20s. So like a lot of investors, what they did was they immediately bought, and then by the time they had lost half of their investment, they sold everything. And this is what happens a lot, because usually people, once again, are listening to outside sources. They're listening to things that have no consistency, and they're just basically throwing away their money. What if we listened to the market? Well, let's see what the market was telling us, okay? If we clicked on steps number 2, a pullback entry, well, we had one right here in 2013. So you had to wait a whole year, but that's okay. You would have gotten a much better price. And it didn't go straight up right after that. That's okay, because you're an investor. You're not trying to pick a bottom, all right? So you've only lost a little bit, and guess what? Another buy was generated just later on, a few months later. So let's say roughly you would purchase the stock around the $25 level. Well, we all know what happened to Facebook, right? And this is just going to 2014, so that was a nice pullback. But as long as there's strong trending markets that are in some type of pullback phase, it will continue to generate pullbacks. Here was another one generated in 2014. So let's expand the chart. Let's go to a different chart here and see the pullbacks from 2014 to present, to 2017. And as you can see, steps number 2 pinpointed every major pullback in Facebook on a weekly chart. So wouldn't you have liked to have had this in the back of your pocket for Facebook and having a way to re-enter into your position, your long-term position, as opposed to simply buying the minute it comes out based off what your buzz is going all about a certain issue that's coming out. Now, a lot of traders wait to hear what their broker is going to recommend to them. And it doesn't mean that the brokers are always wrong, but many times your entry is flawed because this is emotional exuberance once again. For example, here's an example in Win. All right. Let's say your broker recommended the stock, or the brokerage house recommended it, and the stock goes up. As you can see, it gapped up the next day. All right. That's because everyone in the world is listening to the broker and putting in buy orders. So the specialist, which is what I used to do for a good 10 years, almost nearly 10 years, he's saying on the opening, I'm not going to sell all of this because there's so many buyers. I have to pull back, and I'm going to sell it at a higher price because it wouldn't make sense for me to sell it at the previous day's close. It's now worth a lot more because we have all these buyers. It's supply and demand. So he opens the price much higher. This is where 99.9% of the public buys, and then look what happens. The buzz wears off. Everyone was too emotional about this recommendation. Everyone was trying to enter into a door at the exact same time. And once everyone's inside, it's like, okay, what do we do now? And the buzz is off. Now, does this mean it was a bad recommendation by the brokerage house? No. It just means your entry was faulty. So let's click on steps number 2 once again. And all you have to do is go once again to our green strategy tab, click on steps 2, and guess what? A buy signal has been generated much, much lower. Wouldn't you rather just wait and say, I'm going to wait till the dust settles, till everyone, gets hurt on their initial entry, and just kind of wait for a better opportunity? Well, you do. You have patience. You listen to the market, and look at the nice price you have there, okay? So this is how steps 2 can help you with these nice pullbacks. Now, you're not going to see as many signals generated, as you can tell. There aren't a lot of signals generated the way steps number 1 does, but that's okay. You're trying to fine-tune your entries with these lower prices if you're going long, and higher prices if you're going short. Now here's a 15-minute chart of Apple. If you like to intraday trade, that makes no difference. There are still pullbacks within intraday trading. Remember, those are the little stops, the little sell-offs, the reversions to mean. You simply click on steps number 2, and you can purchase at all these lower prices on a 15-minute time frame. All right, so let's review before we go into any questions that you may have. Remember, steps can be applied to any strategy. So it does not matter if you're already a student of mine and you have purchased one of our strategies. You can apply steps to any strategy. Okay. Let's say you have a strategy that you currently like, you feel comfortable with, but it's just not producing that many gains because your entries get you in too early or too late. Steps can help with any strategy you have. It can also be applied to any market. I've mainly showed stocks here, but it can be applied to intraday futures. I use it for my intraday futures trading. We have a number of students who use it just on currency pairs. All right. So once again, if you have a plan that you feel comfortable with, you can apply it to any market you like, even commodities. Now, steps can be applied in any time frame. I just told you how it looked on a 15-minute time frame of Apple. We showed you some 10-minute charts of the spiders. I use it on tick charts of the E-mini. So there's nothing, no time frame that is any better than any other. So I know one of the most common questions I get is, Steve, what's the best time frame to trade this on? What's the best time frame I should be in? What's the best market? I always say the best time frame in the best market is the one that makes you the most comfortable. Remember, my job is not to tell you how to trade. I said that a half hour ago. We're providing you the information. We're working with you, but ultimately you've got to put that work in. You've got to decide for yourself, because that's the only way one becomes a consistent trader. Not by me telling you how to do it, but by you getting the information, working with me as your mentor, and then deciding how you want to apply it. Lastly, it can be applied to any direction. So whether you like to go long or go short, maybe you only like to go long, you don't like to go short, or maybe you only like to go short, doesn't matter. It can be applied to any direction, either steps 1 or steps 2. Now, we have a special attendee discount for all the people today because we really want to get you introduced to this. This is a great, great way to get introduced to our concepts, our beliefs, and our ways of trading in sync with the market. Now, steps here, as you can see, is our really new package. It's brand new. It's something we've just started within the last few months, and we're really excited because now it comes fully operational on our new PTS Primo charts, the new platform I developed with Pro Trader Strategies. So this includes, we're offering you the steps. You can either get the add-on to apply to your particular charting software, and we will supply you with that with the code, so we'll email it to you and you can just upload it onto yours. But we would really strongly suggest applying it with our new PTS Primo chart because it's so great. You have all these different other options and variables that are included as well. And we really feel it's our premier market educational portal. Now, the PTS Primo charts usually cost $500. All right, that's usually if you want to just try it out, it's $500 just for that. We're giving you a 30-day trial with the steps course for only $7, okay? 30 days for $7. Remember, this usually runs for $495. After 30 days, you can decide whether you want to keep it, and I'm sure you will really like what you see, okay? You can apply this to any method, any strategy, any direction. This is for a limited time only, though. A 30-day trial of the PTS Primo charts along with steps for only $7. Now, we're also including the scanner. So let's say, you're not one of these traders who's able to be in front of the chart 24/7. If you come back from work or if you have errands and at the end of the day, you can just simply scan on the PTS charting platform, see what the current steps number 1 or step number 2 setups that were generated. All right, you would just simply go to the steps window, once again, the steps tab, click on the signal arrows and then click on scanner at the very bottom. You'll get a scanner page that appears like this. You will simply click on the load symbols right here, and it will load all the symbols which we provide you with, all the different indices. Now, this is the NASDAQ 100. So in less than 10 seconds, you have the full NASDAQ 100 plotted on this page. Now, all you have to do is hit scan. All right, and once you click on scan, it's going to scan that entire list to tell you where the number 1 setups are and number 2 setups are. If you see a red bar, as you see here on the far right, that's telling you it's a sell. If you see a green bar, which we don't have here on this slide, that would just tell you that's a buy. And then you all have to do is click on the chart, and it's there. That's how simple it is. It's really simple to trade once you use our techniques. We've made it simple. That's the beauty of the PTS Primo charts. It's so simple to apply. Anyone can use it, whether you've been trading 20 years or 20 minutes, okay? Now, once you get there, you'll also have access to our proprietary buy-sell line. This is a great tool which tells you which side of the market to be on. Okay, and it's just a great tool for determining how to trade. One of the ways we designed it is by using our different background screens. So if you see a background that is colored reddish orange, that's telling you that the overall trend is down and that you don't want to be in the market. If you see that the background is green, or I'm sorry, blue, I'm a little colorblind here, but you see it's more of a bluish hue, that's telling you the overall market is up, and you should only be looking for buy setups. And you can use this on an hourly, a daily, a monthly, or even a yearly chart. You have ways to modify the screen so you can be looking at 2, 3, 4 charts at a time, okay? So that way you can tell what the different time frames are. Now, once you do that, all you have to do is click on the signals. Strategy number 1, buy signals, or strategy number 2, steps number 1, buy setups, or steps number 2, buy setups. And they'll automatically be generated. It will help you determine how you want to trade. Now, here's one thing I want to focus on. Let's say we had this presentation 2 or 3 weeks ago, okay? And you had decided to become a member and taken the $7 trial. Well, guess what? Had you gone to Oracle, which was in the middle of June, just a couple of weeks ago, and clicked on steps number 1, all right? A buy signal was generated, I believe, on the 19th of June, just a couple of weeks ago. And look what happened to the stock, okay? Obviously, something came out, some news, but the stock rose up 6 points in about 3 days. Now, did anyone follow what the point was, why the stock went up? Absolutely not. I mean, in terms of what we're doing at Pro Trader Strategies and Specialist Trading, no, we don't follow news. We just listen to the market. So it wasn't like we were, reading the papers and going into the, announcements and the seeing what the earnings were or finding out what the inner workings were of the company. We don't care about that because the market tells us. And the market was telling us through our proprietary entry signal here that you should be buying Oracle. Now, let's say you wanted to purchase at a lower price. Well, it wasn't that much lower, but if you had clicked on step number 2, just about a week prior to that, you actually had just a tad bit lower entry price. Okay, you could have purchased it on the close of that bar, on the opening of the next one, or waited for confirmation for it to trade 1 tick above. Either way, you were long Oracle before anything happened. Why? Because our methods, our techniques are designed to only listen to one thing. That's the chart in front of you. Once you learn how to do that, you'll really get onto that road to consistency. The beauty is the PTS Primo charts supply you with that information. So I strongly suggest you get on board and take advantage of this $7 deal. That's the new platform, the premier educational portal, for only $7 for 30 days. You can decide for yourself after that, but I really think you'll strongly be convinced even after a week that, boy, this is great, and how can I get more applications? How can I get more strategies, okay? So how to take advantage of that? Here's the information. If you'd like, you can contact my sister site, Pro Trader Strategies. That's who I developed the platform with. You can email them at trading@protraderstrategies.com, or probably the best thing would be to call them directly at area code 310-598-6677. Now, the link you see at the very bottom is the link that will take you up to that $7 sign-up page, but it's not a live link. So just go to the chat box on the far right. They've posted a live link in the chat box, and all you have to do is click that on. It will give you more information and enable you to sign up for a $7 monthly trial. Okay, it's a great, great offer. And if you want any information concerning the platform or concerning other strategies or options, contact Pro Trader Strategies. There's no obligation required, and they can give you all the more information about that. Okay, so thanks for waiting. I'm going to open up the question and answer box here. The first question is from John. He says, John or Steve, how do you know it's a pullback and not a reversal? Well, first of all, John, no one knows. I mean, because I stated, I think, at the beginning of the presentation, nothing is 100% guaranteed. But through our methods and through what I've learned in 4 decades, there are certain things the market tells you when it's not in a reversal, that it is a pullback. Now, it's not guaranteed once again, but you have a higher probability of knowing you're in a pullback by using the techniques we teach you. So that's all we're trying to do. Remember, we're just trying to give you consistency. We're not telling you that every trade is going to be a winner. But the beauty of a consistent method is that when you have these small losses from time to time, because of the consistency, you're able to make it back. And that's what we're trying to promote and instill in all of our members across the world. We have members in over 110 countries and in every state in the United States. And we teach them all the same thing, regardless of how long they've been trading or their expertise. So everyone gets the same information. And after a while they learn, they go like, wow, you're right. These are high probability techniques and methods that will increase my odds, okay? Next question is, Steve, how many stocks or windows can be viewed at one time using the platform? That's a good question, Jason. I have only looked at 4, but you know what? I would contact Pro Trader Strategies because I've only at this time used 4 myself. I'm sure you can have more. There's probably some type of limit, but probably ask them and they'd be able to tell you, okay? Johan is asking, hello, Johan. He's asking, do you have annual subscription after the 1-month trial? Yes, I believe we do. But once again, that's a question for Pro Trader Strategies because they handle all the marketing, all the promotion, all the discounting, and all of the different offers such as the one we're giving you today. They're in charge of all that. If you're asking about teaching the way John did about pullbacks and probabilities, then I can answer those questions, okay? But as you can see, Jonas, I think they're answering you that they do have a yearly subscription discounts as well. So the best thing is just to contact them. There's no obligation, contact them, but it's just that we've already had such great feedback on our platform because people are saying, boy, this is so simple. I didn't realize how easy it is. And it's because when I was learning some 4 decades ago, this is the way I would have liked to have been taught. Unfortunately, when I was learning, people taught me this probably the same way they taught you when you first started, and it's all this mumbo jumbo about things I'd never heard of and didn't understand what they meant, and it went in one ear and out the other, and I had no idea. So then I basically said, well, listen, I'm just going to copy somebody else, and I guess I'll just learn that way. But remember, that is a recipe for disaster. That's the way most traders learn, and that's the way most traders decide how to trade. They don't have confidence enough to make their decision, but our platform, along with these simple, basic techniques, give you the confidence to make your own decision. Next question, Jerry's asking, do you still trade with the buy-sell line when the units when using steps? You can if you like. It's up to you, okay? It's entirely up to you. But most of these steps trades are generated with the buy-sell line. They're in sync with that. Because remember, we're always trying to trade in sync with the trend. That's what we're trying to do. We're not trying to pick tops and bottoms, which I've stated thousands of times through my own personal experience. That is a recipe for a disaster. If you're the type of trader who likes to buy tops and bottoms, you would most likely be interested in steps number 2, because you're buying at the bottom of a pullback, which gives you the impression you're buying at a bottom, but you're really just buying at a lower price in an overall uptrend. And if you like to sell at the top, well, you'd like steps 2 because it appears you're going short at the top, but it's just this top of a pullback because the overall trend is still down. But most traders do the opposite. You've got a strong trend underway, and then they try and stand in front of it saying it's going to end right here. Or you have a strong downward trend, and they try to buy that, saying it's got to end right here. And you all know how that usually ends up, okay? And remember, once again, we're having some questions about the webinar. Yes, if you came in later, had technical difficulties, we do record all of our presentations. So just request a link to this presentation from Pro Trader Strategies, and they will send you a recording, okay? But yes, we record. But remember, don't sit on this offer. I mean, can you imagine $7? I'm sure most of you have spent already more than that trading today. If you were trading today, your commission costs are probably higher than $7. Well, you're getting a free platform, live real-time data, along with some methods for actually trading included for $7, one flat fee of $7, okay? So it's a great opportunity to get on board. And the best thing about this is that we're not going to leave you alone. If you have questions such as you have right now, once you come on board, you can always email me with questions, and I'll get back to you as soon as possible, okay? I get literally hundreds of emails a day. I try to get back as soon as possible to all of my students. So don't worry. If it takes a little while longer, I usually do answer all of my students, though. Okay, as we close here, I just want to say you see the value of steps. You see how it can really help you. Remember, it's up to you to decide where to place stops, where to exit, where to use money management. We provide you with all those things as well. So that's further along. If you want to purchase more methods or strategies, they're all included. But for right now, we're just introducing you to a great technique for entering into the trade, one piece of the puzzle that we really feel strongly will increase your odds for success. Steps stands for short-term entry points. They're very high probability entry points, stood the test of time, and we really feel they will increase your odds for success in terms of consistency. So take advantage of that great offer. Remember, only $7 for the first month, and it's just unbelievable offer. You get our platform with all the information and everything included, okay? And you also get me as your personal mentor. In closing, I just want to say thank you so much for attending today. That's the link at the very bottom, but the live link is in the far right-hand corner of your chat box. Just click that on. Call Pro Trader Strategies or email them. There's no obligation at all to get more information, but if you want to become a student of mine, I would sign up right away before the offer goes away, and it goes back to a nearly $500 program that we're going to be offering all of our members, okay? In conclusion, I want to say thank you so much for attending. I hope you got something out of this, and I wish you the best of luck. Thank you so much. We'll see you next time. Bye-bye.